97% of South Africa's chief executive officers are more confident about opportunities for revenue growth in the next 3 years compared to their global counterparts. This, according to the Global CEO Survey. This optimism is 7% above the global average and remains in line with the expectations expressed in emerging economies. Tom Winterboer, financial services leader for Africa at PwC, joins us now to discuss this report further. Thanks so much, Tom, for joining us this afternoon. Well, let's get straight into it because, as I say, we've got South African CEOs more confident about opportunities for revenue growth moving forward than their global counterparts. So let's run through the optimism here, because it seems that it's the same kind of sentiment that's filtered through to CEOs in emerging market territories as a whole.
Absolutely, yeah. So we've spoken to 32 CEOs in South Africa and globally to 1,250 CEOs, and yes, the confidence in South Africa is quite high. Looking just at the next year, we're looking at 47% in terms of growth by South African CEOs compared to the 40% globally, but certainly more optimism and confidence from the South African business leaders.
Absolutely, and I guess it highlights the kind of two-speed economy that we're facing on in the world right now, where you've got developed markets and the pace at which they're growing compared to your emerging market territories. So only naturally to see this translation in sentiment.
Absolutely, really a two-part thing. As you say, the developed economies and then the developing economies. One of the interesting facts that had come out is firstly that Western Europe, in terms of confidence levels, really down to about 25%, which is very low. But both India, dropped about 33% down to 55% this year, and then China dropping from 72% to 51%. So, but still, those confidence levels quite high in China and India. But interesting to note that their main concern is the lack of growth in the Western world.
Absolutely. I mean, it's a growth that filters through across the board, and it's interesting how it's that global dynamic that's now shifting company strategy. So let's explore that a little bit, because it's certainly what's diverting CEO attention to focusing their company and business growth down down less traditional market avenues than they were used to in the past.
Yeah, I think firstly, the concern around the Eurozone and the sovereign debt, that causes quite a lot of concern. But really looking at, so where is it that South African CEOs see themselves go? 31% say really that their growth line would be outside of South Africa. So that's and that would mainly be into Africa, and really seeing that as a growth opportunity. So quite an interesting fact to see.
Of course, South Africa not alone in identifying this growth opportunity beyond South Africa's borders and specifically on the African continent. Let's put in our competitiveness, into this equation, because it seems that there's some lack of confidence in just how competitive South African organizations can be amongst South African CEOs.
Yeah, I think South African CEOs sometimes underestimate our competitiveness and what we can really do, but I believe that we're really competitive around the world. But in terms of competitiveness, firstly, you also need to get foreign direct investment, and there we compete with a number of developing countries. And in fact, I've been a call with some of my colleagues, abroad, and 7 of these developing countries, and you really compete for the same investors. Firstly, so to get the investment in, we really need to make sure that we get the package right, and certainly into the rest of Africa, you compete with some of the other developing markets together with the developed markets.
What about our ability to compete on home ground? Because where you've got foreign players coming into South Africa as well a little bit more aggressively, your strategy has to change and evolve in tandem.
Absolutely, yeah. CEOs are really looking at that strategy and saying, well, how do you deal with it? But once again, we certainly, in the financial services industry where I spend quite a lot of time, we've certainly seen the local players hold their own, so very competitive from that perspective. But then also, once again, looking at, how do we develop our own home markets, looking at mergers and acquisitions, looking at joint ventures. So it's almost with volatility around the world, in fact, we're really pushing it.
What really stands out in terms of presenting a little bit of a hurdle to competitiveness here in South Africa is the challenge caused by labour market inflexibility. So let's go through that a little bit, because this has been highlighted time and time again via the various labour reports that have come through, specifically via AdCorp.
Yeah, the big thing on that is really that, as I said earlier on, we're really competing with the, with other countries and developing countries around the world. So when people come and invest in a country, they look at a package, and things like labour law plays a very big role. And you can imagine for yourself, if you were a CEO, you'd probably go where it's easier to invest. But clearly some of the other areas we're good at, and you know, that runs with health, housing and that sort of thing.
Certainly we've seen a significant percentage of CEOs believing that it should be government's top priority to take steps to create and foster a skilled workforce, also being a little bit more flexible with regards to labour regulation. On the other hand, we've got over-regulation generally cropping up as a concern among CEOs, and that with last year seeing both the Consumer Protection Act and the New Companies Act being introduced. What's sentiment like around regulation in the South African environment?
Yeah. South African CEOs in this PwC survey, you know, very concerned about regulation and over-regulation. But regulation really is a two-part thing. Firstly, it would be, you know, South Africa-specific regulation and legislation. The other part of that would be, you know, that sort of pushed down to us from global levels, such as Basel III on the banking side and Solvency II in South Africa, Solvency Assessment and Management for insurers, where if we want to play on the world stage, we've got to get our own regulation in place to be able to compete.
Just how much of a lesson have CEOs managed to harness from the global turmoil? Because it's certainly made them a little bit more aware of the risks and how to navigate uncertain terrain.
Yeah, I think the CEOs have really learned quite significantly from that. I think they've learned to operate in a much leaner environment, and that boils down to, you know, sort of, you know, cost cutting exercise, which once again remains on the agenda for the future.
So if you've got to look at the silver lining from the economic turmoil we've been through, that would be one of it, I guess. Tom, pleasure chatting to you this afternoon. Thanks so much for having joined us at the desk. Tom Winterboer is Financial Services Leader for Africa at PwC.